Hello and welcome. You're watching Business Today Television. This is the earnings special conversation with Max Healthcare that we're going to have. Remember, the company has reported its numbers for Q4, a 21% surge in profit after tax at 376 crores on the back of rising revenues. We've seen the network gross revenue has come in at 2,429 odd crores, reflecting a growth of 29% as compared to 1,888 crore rupees that was reported in the corresponding quarter of the previous fiscal. We've also seen that the bed occupancy for the quarter was at 75%, and we've also seen that the occupied bed days are up by 30% on a year-on-year basis, with average revenue per occupied bed, or RPOB as we call it, is at 77,100 rupees in Q4. Let's dive into the details with the top management joining in to detail for us the key fine print of the earnings and the outlook. We are joined by the Chairman and Managing Director, Mr. Abhay Soi of Max Healthcare on the program with us. Warm welcome to you, sir, and thank you so much for taking the time out. Do help us understand, sir, what do you think are top two or three key factors behind the growth that you posted in Q4, and you end the year with, as per your expectations, in line with what your estimates were, and what's the outlook that you have at this stage, sir?
So absolutely, I think firstly, this has been the 18th consecutive quarter of year-on-year growth for us. And this has been in line with our expectations. We've had, like you mentioned, a 29% increase in revenue, 26% increase in EBITDA, and a 21% increase in profit after tax. This comes on the back of a year which we thought is going to be a fairly benign year because essentially we had capacity additions to the tune of about 30% coming up in FY26, whilst FY25 was only supposed to have one 300-bed hospital, which was about 7 or 8% capacity expansion. But in the last 1 year, essentially, we acquired 3 hospitals, 2 at the beginning of the year, which was essentially Max Nagpur and Max Lucknow, which we bought, which was erstwhile Max Sahara. And subsequent in the year, we completed the marquee Max Max Noida Hospital acquisition, which was in November. So I think, we've ramped up the capacity by close to 30%. It's also led to an increase in occupied bed days up to 30%. We've had a remarkable sort of growth even in our existing hospitals, which are already full till the gills. It had an occupancy of 75% last year, but currently in the current year, it's had an increase of, in the current quarter, it's had a 78% increase, so it's a 3% increase in overall occupancy, as well as increase in RPOB. Now, this has been aided, like I said, by a overall increase in capacity by about 30%, as well as the payer mix. For example, international business has grown by 29% year on year. Extent of oncology, robotics, and so on and so forth as well, grown at mid-20s. So, all of these things have kind of aided in the results that we have.
Right. So, Mr. Soi, if you could highlight for us, going forward in FY26, what's the kind of trajectory you are expecting, especially on the back of the acquisitions that you've just marked for us, in terms of occupancy levels, where you're at is 75% odd. Where do you go from here? RPOB is at 77,100 rupees. How do you see the panning out of the space? And especially if you could also mark out for us the EBITDA per bed, sir, because there has been some dip, I believe, in Q4 vis-a-vis the previous one, sir.
Well, the EBITDA per bed, you have to look at existing hospitals versus existing hospitals, and that has actually increased by about 8%. So we are close to about 78 lakh rupees as far as EBITDA per beds are concerned, like to like. And this just purely excludes the Dwarka, the new hospital that we started last year, because it was a new hospital which started in July. It broke even in a record time of 6 months. I don't think it's ever been done that fast in the industry before. We broke even in December. So obviously in the first quarter this year, it's very low on sort of EBITDA. And that's kind of dragged the overall EBITDA per bed down. But like to like mature hospitals, they've, from 75, 76 lakh rupees has gone up to about 78 lakh rupees EBITDA per bed. Coming to your first question, I dare say we're about to embark upon perhaps the most interesting year, going forward, which is the current year. Last year, we did 3 acquisitions, like I said. The first 2, which we did in the beginning of the year, in the first year of operations under our management, we've been able to increase, the EBITDA by close to 90%. Between Nagpur and Lucknow. So it's 106% in Lucknow and 57% in Nagpur, respectively. That's in the first year. So we are looking for both of those to gain momentum, to snowball further in the current year. Then you have the Max Dwarka Hospital, which we started in July. Like I mentioned, we broke even in December. And, this year it's already in the money and it's going to be ramping up. The margins are only going to expand going forward in the current year. And then we have the JP Hospital, which we acquired in October, November last year. And, this is again going to be ramping up. But besides all of these, in the next 90 days alone, we are about to open another close to 1,000 beds. It's the brownfield capacity expansion at Max Nanavati in Mumbai. We are expecting another 200 beds coming through in our Mohali Hospital in brownfield, as well as another 400 beds in Max Saket in Delhi. And this is going to be happening over the next 3 to 4 months. And then towards the end of the year, we have Max Gurgaon, which is another 500 beds. So, essentially, you're looking at another 30% increase in capacity, almost entirely through brownfields and coming through this year. And like I said, this is going to be aided by what we've done last year, which is only gaining momentum. So, very exciting year ahead.
Absolutely. So, sir, just for clarifying to all our viewers, 5,000 beds is what you're at currently. You're looking to add about 1,600 or so in the next 6 to 8 months. That will take your overall bed count to approximately 6,900. Is that right?
Well, we are adding 1,500 beds. So, from 5,000, we'll get to 6,500.
Okay.
Yes.
Okay. And you also had a target, if I believe, sir, closer to 10,000 by FY30. Is that so?
Well, at what we are presently building out, we will be 9,000 beds by FY28, and or at least calendar year FY28. So, it'll be FY28, 29. And this is without assuming any inorganic growth. That means any acquisitions. This is the current pipeline that we are building out, like I said. Last year, we did 3 acquisitions. I'm fairly sure over the next 3 years, we'll do plenty more. So, I have no doubt we'll reach 10,000.
Perfect. Now, help us understand, sir, about 2 of your other verticals, Max at Home as well as Max Labs. How has the growth been in Q4? What is the trajectory you're looking at going forward from here?
So, very interesting. I think, they've been very consistent. Max at Home, again, has a revenue growth of about 22%. In this quarter, Max Lab has a growth of 19% in the quarter. I think on an annual basis, again, they're both about 22% each. And that's been sort of consistent. They've been growing at between 21, 22 to 24%, 25% quarter on quarter now for many, many quarters. So that sort of continues. And this is without any inorganic growth. Max at Home, and both these businesses we offer in 50 cities. Both are profitable, and Max at Home, is probably the largest home care business and the only profitable one in the country. So we are quite sort of confident about the trajectory as far as both these businesses are concerned. Having said that, they're still a very small part of the of our business. In this quarter we had I think about close to 100 crores, close to 90 or 100 crores of revenue coming through from this. Our annual revenues are now reaching 9,000 crores. So I think this continues to be a small part.
Okay. Sir, just to ask you, since you are right there in the business and you'll be able to help us understand a little bit, from last 2 to 3 days, we've been increasingly hearing about rising COVID-19 cases in the Southeast Asian countries, including India as well. Stock markets have also been reacting to this news as of yesterday too. There has been some recovery today. Could you give us a sense of whether there is increasing amount of hospital admissions or testing at Max Labs on COVID, sir? And what's the situation?
So there has been, anecdotally, I think also there has been an increase in COVID cases. Clearly there has been a major ramp up as far as Singapore and Hong Kong are concerned. But do keep in mind it's a ramp up on a small base, right? When somebody says there's 300% increase in cases, I mean, you're literally looking at a very, very small, universe to start with, and then the 300%, doesn't mean much. But having said that, this number has been growing in India as well. They are not, severe cases. We haven't seen any severe cases, so there are no real hospitalization because of which. Of course, if you've got comorbidities, you've got cancer, you're a transplant patient, you're immunocompromised, and then you get COVID, then, essentially people do seek admissions at that point of time, and that's more precautionary, I would presume. But we have not seen any severe cases of COVID. And unless, the virus, although in the past it is known to sort of change course and kind of take a different track altogether. But the current strain is not, I think, anything to significantly worry about. Having said that, I would also want to sort of caution people that one should not shy away from testing, because isolation is very important. And if you don't know, then you're not going to isolate yourself and you're likely to kind of spread the virus. It's a very minor strain. So, I mean, just try to sort of isolate yourself for the first, 72 to 96 hours. And I think, everything should be all right then.
So in the end, just help us understand the three growth drivers that you will bet on to build on this consistent growth that you've been posting over the last many quarters, like you pointed, and perhaps build on it as well. What will be those three growth drivers for you, sir?
So look, I think we have a massive macroeconomic growth driver. You have a baby boomer population, which is growing. It's a young population, a large majority of people below the age of 27, 28. But, I don't think anybody can argue that every year this population will get a year older, a little more sicker. The per capita income, as we are marching towards being a $5 trillion economy, is going to continue increasing. So people's affordability is going to increase. People's awareness is increasing. Our idea of public spaces and quality, I mean, whether it's airports or roads or even stations, railway stations, etc., is only going northwards. I mean, so is the expectation from healthcare, right? And from facilities, etc. We are on extremely, extremely underpenetrated as far as quality healthcare assets in this country is concerned. And to me, that is the first and foremost biggest driver that you have. I think the second big driver that we have is, again, from a medical tourism standpoint, I think, purely the cost and the skill sets that we are able to offer in India. No other country in the world comes even close as far as, and this is a significant comparative advantage that we have, and we need to tap this a little more. We've seen as the sort of image of the country has been improving globally. We've seen a big sort of inbound as far as, because you need to be a safe destination as well. So we've seen an inbound as far as this is concerned. Yes, there have been kind of geopolitical issues in Yemen and Bangladesh, which may have had setback, but there's always going to be, two steps forward, one step backward. But we've had a 29% increase in year-on-year growth. So that tells you that there's significant sort of inflow of these kind of patients to India as well. And the third, for us, which is more sort of inherent to Max, is the capacity addition. I mean, last year we were 3,500 beds. This year we have 5,000 beds. Next year, same time, we are going to be 6,500 beds. And by 2028, we'll be at least 9,000 beds. So I think these are significant growth drivers. And of course, there'll be smaller sort of this thing as you move up the technology curve, move up the payer mix and so on and so forth. But I think the three macro trends for us is going to be domestic demand, international demand, and our own ability to set up capacities as we're going forward.
Absolutely. A pleasure speaking to you, sir. Thank you for all those insights. I wish you all the very best for the upcoming quarters as well, and hope to see you on the other side of the next quarterlies on the show. Thank you so much for being with us.
Thank you. Appreciate it.
All right, viewers, with that, we wrap up this special conversation on Max Healthcare. You did hear from the top management the key drivers for growth that they're betting big on going forward from here. 9,000 beds by FY28 is what the expectation is, but he did say that he's not, ruling out a 10,000 beds soon, right after FY28 as well. The expansion will continue, and they are building up capacities with, also coming in with respect to brownfield expansions that they are looking at with several of the new acquisitions that already have taken place within the company. So we'll continue to get you such fascinating insights from the world of earnings. Do stay tuned with us on Business Today Television to catch all of those updates.
Good afternoon, ladies and gentlemen. A very warm welcome to you back on Business Today Television in our ongoing series of fourth quarter earnings where exceptional performances have come to